Hello, and welcome to the Moss Adams presentation of Service Organization Control Reports, what they are and what to do with them. Before we get started, we have just a brief video of some housekeeping items.
Welcome, and thanks for joining us. Moss Adams is pleased to present another in our ongoing series of continuing professional education webcasts. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. For example, you can click the File Folder icon to download the group attendance sheet and a PDF copy of today's slides. You can ask our presenter questions during the webcast by clicking Q&A in the bottom left-hand portion of the icon bar and typing in your question. We'll do our best to answer all questions during the presentation or follow up via email. We'll ask polling questions throughout today's presentation. Per the National Association of State Boards of Accountancy webcast CPE standards, CPE credit will be awarded based on your participation in these polls. To respond to a poll, click the button next to your answer. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. Please have all group members sign the sheet, and please remit only one sheet per group. Also note, today's session will offer you one CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions. CPE credit can be awarded only to participants registered as themselves and is not available to participants who view the on-demand version. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon to open a PDF file you can save to your computer. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances. We're now ready to begin. Thank you.
Presenting today is Colin Wallace. Colin has over 14 years of internal audit, SOX 404, SSAE 16, and forensic audit experience, where he has organized and performed financial, operational, and compliance reviews throughout the United States and abroad. Colin has been involved with every aspect of the audit process, from planning, analysis, and reporting, and overall project management. Colin also manages SOX 404 and SSAE 16 engagements from their initial planning to final reporting. He is an active member of the firm's technology, communications, and media group, and a leader of the firm's forensic and investigative services team. Joining Colin is Erin Krivanek. Erin has over 9 years of both public and private accounting experience. She specializes in internal audit, SOX, and controls-based consulting for financial and information technology processes. Erin assists her clients with the implementation of SOX 404 compliance programs, risk assessments, internal audit plans, process effectiveness, and other risk mitigating strategies. She works with SOX 404 clients to implement controls to assess their SOC reports for proper scope, user entity controls, and testing procedures and results. Please welcome Colin and Erin.
All right, thank you. And we'd like to start out by going over some of the objectives of the day. And if there's anything on this list that we're not going to be covering, please feel free to ask us a question in the live chat, and we'll try to address it. But our main topics are going to be to try to distinguish between a SOC 1, 2, and 3 reports. And in addition, we're going to talk about the Type 1 and Type 2 of each of these reports as well. We want to analyze the scope of your provider's report, be able to list items that aren't covered by your SOC 1 reports, interpret the contents of SOC 1 report service providers, and how you should work with your auditor and management to evaluate and complement their service providers' controls. So in general, we want to be able to make sure that you leave today understanding the differences between the types of reports and how to evaluate them. So many of you probably were familiar with the term SAS 70, and this term had been used for years to talk about the internal controls reports that covered financial reporting. Now, those were replaced by the new SSAE 16 standard, and more specifically, when you hear of the term SSAE 16, it's referring to a SOC 1 report. So a lot of times when it's used in the field, or if you hear it used around, and SSAE 16 may be used interchangeably with the SOC 2 and the SOC 3 reports as well, but really the SOC 1 is the only one that is going to be performed under the SSAE 16 standards. The SOC 2 and SOC 3 are performed under the Attest Standard 101, and they're following the trust services principles. And the difference between those reports, which we're going to go into in quite a bit more detail, is that the SOC 2 report is going to be a detailed report, and the SOC 3 is more or less a summary report of the SOC 2 findings. So as mentioned, the SOC 1 report, this is a control report that is generally used to cover internal controls over financial reporting, financial processes. If you think of your company as a provider of a certain service which has a financial statement impact to your customers, the SOC 1 report would provide the assurance around those controls that your clients would be able to leverage as part of their internal control framework. Now, these are different than a SOC 2 report, which, again, these are, all three of these are internal control reports, but a SOC 2 report is specifically addressing one or many of the trust services principles and criteria, which are security, availability, processing integrity, confidentiality, or privacy. And when selecting a SOC 2 report, a service provider can select one or many of these different criteria. The only one that comes, I would say, standard is the security criteria, which includes common criteria of the other four. So if you have security and also want to add availability, you can have a SOC 2 report issued with those two principles, or you can have all five. And then again, a SOC 3 report is going to cover the same scope as a SOC 2 report, except for the output is going to be a general use report that you'd be able to provide to the public versus the SOC 2, which is going to be more restricted to your direct clients. All right, so some specific differences between the three types of reports. Some of this I already went over. The SOC 1 report, again, it's going to be issued for the users and their auditors. And the SOC 2 report, again, users, auditors, and other specified parties. The SOC 3 report can be posted on your website. It can be distributed to the general public. It's not a limited use report, as it's just a summary report. And again, when you hear of a SOC 1 or an SSAE 16, it's most commonly referring to a report over financial reporting risks and controls specified by the service provider. And if you're a company that is requiring to comply with internal controls over financial reporting, SOX 404, or even if you're just a private company that's trying to identify all of your organizational risks, you might look to a SOC 1 report to address some of those risks that are outsourced to a service provider. And again, the SOC 2 and 3 reports are focused on the specific trust services principles of security, availability, confidentiality, processing integrity, and privacy. And it can be applied to a large, broad variety of systems. So at this point, we want to open it up for the first polling question.
Thanks, Colin. So tell us a little bit about yourself. What kind of company do you represent? Are you a company that leverages service organizations or providers? Are you a third-party service organization or provider? Perhaps a service auditor or something not on this list. Please select the radial button next to your answer and then press the submit button in order for your answer to be recorded.
And for purposes of this question, the first answer would be if you're a company that is leveraging a third-party service organization. I understand that you can be a third-party service organization and also leverage another company who might also be a service provider. But the first answer would be if you're needing to you need to comply with SOX, or if you're looking at it as your overall risk assessment process. We're going to go ahead and show the results. So it looks like over 50% of you are organizations that are leveraging a SOC report as part of your overall risk management process, which is good because that's what this webinar is focused on and will be the most benefit to. All right, going into a little bit more detail on the differences between the SOC 1 and the SOC 2 and 3 reports. Again, the SOC 1 is going to be most applicable to internal controls over financial reporting, and the SOC 2 and 3 are going to be more of your operational controls covering the 5 trust services principles. The definition of the scope and systems, the SOC 1 is going to be largely focused on accounting records of the system, the business process, transactional type controls that you would expect to see if you had this particular service in-house. So, and that's in contrast with the SOC 2 and SOC 3, which they have a defined scope of the system that is going to be covered, and it's going to largely be driven by the infrastructure, software. It's more procedural in nature, the people involved, and the data. So think of the SOC 1 as more of your processing and business process type controls, and the SOC 2 and 3 as more of your underlying IT environment. And again, the level of standardization is something that I want everybody to look closely at. And this is the main reason why it's important to develop a SOC 1 review process that is thorough and robust. The level of standardization of a SOC 1 report, if you read the bullet there, control objectives are defined by the service provider and may vary depending on the type of service provided. So in the case of a SOC 1, the control objectives that are going to be covered in the report are actually defined by the service organization. They may or may not be in alignment with the controls that you are needing to have from a financial reporting perspective yourself. So again, the actual service organization is defining what objectives that report is going to meet, and ultimately what is included in the system that is being audited. And that's in contrast to a SOC 2 and SOC 3, which, as I've mentioned a couple of times, relates back to the 5 trust services principles. The principles themselves that are going to be covered are selected by the service provider, but the AICPA has prescribed criteria that are used instead of the control objectives being identified by the service provider. They have to follow the prescribed criteria that the controls have to map to and meet in order to have a SOC 2 report issued. So again, SOC 1 report, the service organization is identifying the objectives, and for a SOC 2, it's a prescribed list of criteria depending on which of the 5 trust services principles are selected. All right, just some of the different sections that are included in the 3 reports. They all include an auditor's opinion, a management assertion, a description of the system, and the description of the system is basically what part or what product is going to be included in the examination report. And as you know, some companies may have 2, 3, 4 unlimited number of products or systems that are being offered to its customers. So certain service providers may actually have 1, 2, 3, 4, unlimited number of SOC 1 or SOC 2 reports that they issue because they're covering different systems. The SOC 1 is going to be based on control objectives, SOC 2 based on criteria, and the SOC 3, being a summarized report, is going to be referencing to the criteria that it's covering. And again, for both the SOC 1 and SOC 2, they're going to have the control activities identified, test of operating effectiveness, test of results, and you see the asterisk next to each one of those. It's going to become apparent in the next slide why that is. And we have a question. Will you be addressing what is meant by a Type 1, Type 2 report? Actually, yes, we will. And that is on our next slide. So many of you probably have heard the terminology of a SOC 1 Type 1 and a SOC 1 Type 2. Likewise, there's a SOC 2 Type 1 and a SOC 2 Type 2. And the differences between the Type 1 and the Type 2 is the coverage. So for a Type 1, the coverage is a point in time, and more or less it's a design assessment of the controls in place to meet certain objectives. So as of a certain date, the controls are in place and designed to address the control objectives that have been identified or the prescribed criteria in the case of a SOC 2. A Type 2 report is a period of time, and this is where you will see that the report covers the period of January 1st through September 30th of that year. And it will include a test of the design operational effectiveness and then the test of results during that period. And the service auditor will select a population and sample transactions throughout that period in order to conclude as to whether or not the controls were operating during a period of time. So that's where it gets very confusing to some with respect to hearing if it's a SOC 1, SOC 2, SOC 3, and a Type 1 and a Type 2. But think of the Type 1 and 2 as just as a design assessment for a Type 1 and a design assessment and operational effectiveness testing for a Type 2. So like I said, each of the SOC 1s can have a Type 1 and a Type 2, and the SOC 2 can as well. Because of its nature, the SOC 3 report is only a Type 2. So it covers a period of time. You cannot have a Type 1 for a SOC 3 report. And just to throw some additional terminology into the mix, if we haven't done enough already, there are international recording standards. So the SSAE 16, also known as the SOC 1, is what's used in the United States, but there are similar standards used throughout the world that each have their own designation. Canada has their own, the United Kingdom, Australia. All of these are reports on internal controls over a specified process or system. And there's also an ISAE 3402, which is the international standard. So when having a report issued in the United States, you could actually have a report issued under both the SSAE 16 and the ISAE 3402 standard if you wanted to, and it would have more applicability globally if that was the case. And we're going to go right into another polling question, and that is, an SSAE 16 is commonly referred to as a SOC 1, SOC 2, SOC 3, or all of the above. All right, I think everybody had enough time to answer that. So for those of you who answered SOC 1, that is correct. A SSAE 16 is commonly referred to as a SOC 1. Now, for those of you that answered SOC 2 and all of the above, I would almost argue that you're correct as well in that most people do refer to an SSAE 16 when referring to both the SOC 1, 2, and 3. But technically, the SSAE 16 standard only applies to the SOC 1, and the AT 101 standard applies to the SOC 2 and 3.
All right, so now that we understand the fundamentals of a SOC report, we're going to turn our focus on why they're important to us as service providers, as management of companies relying on a service provider, or as auditors. SOC reports are relevant to a company's audit when the company is relying on a service to provide, to perform activities relevant to financial reporting. This could include payroll processing or providing an IT data center. If a company, if a company expects to rely on those services provided by the third party, then a SOC report must be obtained and reviewed. So this slide is an illustration of an organization that's using a third-party service provider for payroll processing. As you can see, the company is responsible for ensuring that the data is collected and submitted to the third party, and then the third party will process payroll and then provide the payroll details back to the company, who will continue to finish that cycle. So one thing that's really important to note in this process is that the entity that's using the third-party provider is actually responsible for ensuring that all of the data that gets submitted to that processor is complete and accurate. So there is a responsibility on the entity to ensure that the data that is provided to them is appropriate, and then that processor is just performing one key piece of the process, but not the entire process. So over the last several years, the PCAOB has focused a lot on the SOC reports and identified some areas for improvement for management and, in some cases, for external auditors. Reliance on service organizations was not identified or properly documented. This specifically is focusing on documenting whether the service auditor's report provides sufficient audit evidence about the effectiveness of the relevant controls. They also noted that subservice organizations that were scoped out of the report were not addressed. The SOC 1 report for subservice organizations may not have been obtained, and if it wasn't, there was no documentation to explain that consideration and why it was scoped out. complementary entity user controls, which are controls that should exist with the company that is relying on the third-party service provider, were either not sufficiently tested or were not properly linked to the testing of user controls that would address the relevant considerations. Update procedures were not properly performed or documented when the auditor's report did not sufficiently cover the entire audit period. And this would include something like evaluating a bridge letter. And control exceptions identified by the service provider were not evaluated to support the appropriateness of the combined risk assessment to prevent or detect potential misstatements.
And we have a couple of questions that have come in, and I think this is a good spot to address those. The first one that was asked is, as a financial service organization, we see many organizations that try to pass off their co-location facility SOC reports as operational control audits for their applications or services. How should we address this? That's a very good question, and one that we actually run into quite often as well. So in this scenario, you as the company that is trying to rely on a third party for certain services, that service provider is then leveraging a SOC report that they have received from one of their co-location providers' facilities as their own and passing it over to cover basically the controls that you're asking about. That is typically not going to be something that will cover all of your risks. It's going to be on a case-by-case basis. In those scenarios that I've identified or I've come across, it actually has been a deficiency in the internal controls because there is certain processing that occurs in between the service provider and then their co-location facility that is not covered by the report. And you will see that if you've read a good number of SOC 1 or SOC 2 reports, that a lot of times they do use subservice providers, and those will be included as part of their SOC report. Whether it's, and I know it kind of seems like a cascading waterfall effect, but if you're a service provider and you're using a subservice organization as part of your controls, you could include a control that you were reviewing the subservice organization's SOC report and have that included in your own SOC report as a control. So you will see that quite frequently, and we don't get into it in today's discussion very much, but there's what's known as a carve-out and an inclusive method when dealing with subservice organizations. And a quick definition of those would be if there was a subservice organization being used and they had their own SOC report, you would generally carve those out of your SOC report and leverage the SOC report for the subservice organization. If they don't have one, then you would likely have to use the inclusive method, which would mean that you would have to go to that subservice organization, or rather the service auditor would have to go to the subservice organization and actually test the controls at that organization as well and include it in the overall report. But to answer your question, that does seem like it would be a problem if your service provider is just passing along a SOC report from one of the organizations that they leverage without having any controls on their end that they're actually testing and including in a report. Now, you could get around that by actually going to that service provider and performing a test of controls yourselves as the client, depending on whether or not you have an agreement with them that allows you to perform that audit. And another question that came in, just to address it before we get to the next section, just clarifying some terminology. When we're referring to a service provider, a service organization, we're referring to the organization that is the outsourced provider for a certain service. When we're talking about a user entity, we're talking about the user of the services. So it would be the company that is leveraging the services of a service organization or service provider.
All right, so as we start to think about how our SOC report's evaluated, the question becomes, how do we identify when there is a need for a SOC evaluation, and what does that look like? So this evaluation should be performed independently both by management and by their external auditors. So the first thing that we need to do is to inventory our existing outsourced vendor relationships. Make sure that we understand all of them. For each relationship, we should understand the services provided and assess the key financial reporting risks associated with each. In doing this, we'll be able to identify the in-scope service organization. So once we've identified the in-scope service organizations, we should identify if a SOC report exists for those. And if there are multiple, we need to make sure that we have all the relevant SOC reports. So basically just taking an inventory of all of your service providers and identifying which ones are in scope for your financial reporting risks and obtaining those reports. And then the last step here is just to test and conclude. And so this is basically if you're an organization that uses a service provider and performs SOC, generally this is your SOC 1 control, where you would obtain the report and perform an evaluation. So testing and concluding is basically evaluating the design of that control and then actually performing the test of that control. And so that's what we'll talk about a little bit later as we get into further detail in our presentation. So then when we start to think about the structure and content of the SOC 1 and SOC 2 reports, they generally follow the same structure in every report, and they'll include an independent service auditor's report, which includes their opinion, management's written assertion, the service organization's description of the system, the complementary user entity controls, and then the control objectives for SOC 1 and the criteria for SOC 2, and both will include the control activities and control tests performed. And then they may also include supplemental information from the service organization. So the key thing to remember here is that when we're performing an evaluation of a SOC report, we should identify and evaluate each section of this report.
All right, and before we move on, again, there had been another question that came in, and that was asked about if you've requested a SOC report and your provider will not give it to you, what else can you do to, I guess, address the risk areas? And this is a tough one. If they are a client or a service provider of yours directly, then they should be providing that report to the extent that they have done one. Now, there isn't a requirement that these service providers have a SOC 1, 2, 3 performed at all. So as part of your system selection or your service provider selection process, this should be one of the attributes that you're looking for, is whether or not they do have a SOC 1 or a SOC 2 report available, and is it something that they can provide to you. So certainly you can stop using that provider and move to one that does have a SOC report, or assess what it is exactly that you're needing to get from the report, and ask them if they can provide any sort of information to you that would satisfy the risk that you've identified. But no, there is no requirement that they distribute the report, and there is no requirement that they have one done. next polling question, SOC reports generally cover controls over. You don't need much time for this one, so I'm going to advance it. So this was a quasi-trick question because I was expecting this type of response. The answer is all of the above. The SOC 1 reports generally cover financial reporting, and the SOC 2 and 3 are more notably covering operations and compliance. So everybody gets this one right. So the rest of our presentation, we're going to be going through how to evaluate a SOC 1 report. And the reason why these are all going to relate to SOC 1 is that this is the most widely accepted report for SOX programs and for addressing risks of internal controls over financial reporting. Also, it is the more tricky of the three types of reports because the control objectives are set by the provider, the service provider, and with a SOC 2 and 3, again, those are prescribed criteria that you can look at the AICPA guidance for and know exactly what those reports are covering. So first of all, there's the Independent Service Auditor's Report, which is going to lay out management's presentation of the system, the suitability of design, and then overall the opinion on whether the operating and effectiveness of the controls is working. And in parentheses there I say type 2 reports. If it was a type 1 report, it would be an opinion over the design. But those Independent Service Auditors reports generally cover the scope, the service organization's responsibilities, the inherent limitations, the auditor's opinion, and then also the description of the test of controls and restricted use. So why do we care? You're going to want to take a look at the coverage of the report to make sure that it's adequate, and this is where you're going to be looking at the time period that's covered as well. So if the report covers January 1st through September 30th and you're a 12/31 year end, then the report will have covered effectively the controls in place and operating for the first 9 months of the year for your organization. If you obtained a SOC report and it covered the 12 months ended March 31st and they hadn't issued another one to date, then when you're looking at it, you may only have comfort that the controls were tested and operating during the first 3 months of your audit period. And we'll talk a little bit more about what you do in those cases, but that's why looking at the report coverage and the dates that are covered are important. You also want to look and see whether it's a type 1 or a type 2, which, again, if you're looking at the date range, you're looking at a type 2 report. If it's a type 1 report, which is a point in time, it's really going to have a fairly limited use to you if you're trying to use the SOC report for SOX 404 compliance. You're trying to use it as a private company just to demonstrate that your service provider has controls in place and that you're covered from a risk standpoint, then a type 1 report might be applicable, and it might be all that you need. And the third bullet is talking about whether or not your service provider is using service providers themselves, or rather sub-service providers, and whether they're adequately addressed as part of the report. And then just like any audit report, you're going to want to look and see if they're getting a clean opinion or if there's a qualified or a modified opinion related to the controls in place. We'd like to have our last polling question here. To the extent the SOC report includes an unqualified opinion, no further review procedures are necessary by the users of the report. I'd like to get 100% on this one. Just a couple more seconds. Oh, 87%. So again, because of the fact that there are differences in the control objectives and the potential exceptions that are called out in the report, even though there's an unqualified opinion, you would still need to do a thorough review of the report. And we'll go into that in the coming slides, into what that would entail. So I'm not going to spend a lot of time on management's written assertion, but it is generally included as part of the SOC report, and it's basically management's representation that they have the controls in place, they're accurately represented, they've been operating during the period. So management is asserting that their controls in place and are operating. And then the review of management's written assertion, what you want to look for here is to make sure that what management is asserting to is in line with the auditor's opinion, that they're not indicating any limitations or qualifications in their assertion, such as our controls were operating except for XYZ, and make sure that they are not omitting anything or limiting the scope of their assertion beyond what is included in the auditor's opinion. So the service organization's description of the services, or of the system rather, this is an important section to look at for the reason that I talked about earlier, in that a service provider could issue 6, 7, unlimited number of SOC reports on the various products or systems that they have and that they offer to the public. They might not have just one SOC report that they issue for everything. So you really want to make sure that when you're reviewing the SOC report in hand, just because it's from your service provider doesn't mean it's covering the area that you are leveraging them for. So you need to take a look at the system description, make sure the services provided are in line. I'll flip over to the next slide. So when you're reviewing the system description, make sure that the systems provided, or the services provided rather, are consistent with the services you've requested, and understand if there are any significant events that impact the services relied upon. More or less, going along with my comment about the scope of the period covered, you want to make sure that the services provided are in line with the services that you were expecting to receive. So it's important to review this section. You cannot just take a SOC 1 report from a provider and look at the unqualified opinion and believe that you have your controls covered. So, very important. Complementary user entity controls. So these are controls that the service provider is listing in the report and indicating that you, as the user entity, need to have in place in order for their system to generate the output that you're expecting. Using an example earlier from the graphic about a payroll processor, what controls do you have over terminations, over changes to employee pay data, the transmission and timely transmission of those changes to the service provider are going to impact whether or not the service provider is able to perform its operations. So as an example, one of the user entity controls of that service provider might be that the user entity has controls over the timely communication of terminations to the service provider. So these are important because, and what you want to review these for is that you have controls in place that you can map to any of those user entity controls that might have an impact on financial reporting. Now, again, this is an area where the service provider can put anything they want. They could put in a user entity control that says the user entity is responsible for hiring good people. They can be very vague or they can be very specific. So when you're reviewing these reports, it's important to go through these at a pretty granular level and ask the question as to whether or not they apply, whether or not they do have an impact on financial reporting. If it's accuracy and timeliness of communication of pay rate data, I would say yes. If it's other items, maybe not. So again, these are going to be something that you want to map your existing internal controls to, but you might not have a one-to-one match for everything, but you should go through and explain why you don't need to or how it's covered by another process or procedure. All right, control objectives, control activities, and tests performed. Again, with a SOC 1, the control objectives are defined by the service organization, service provider. So you want to make sure that those control objectives are in line with what you would have expected to see if you had this process in-house. So if you were processing your own payroll, what control objectives would you expect to have in place, and what controls would you expect to see if that was an in-house department? And when you're evaluating whether or not, let's assume the control objectives are what you want to have in place, you need to take a look at any control exceptions that are identified as part of testing. So just because there's an unqualified opinion does not mean for a SOC report that there are no testing exceptions. So there can still be exceptions to the testing, which generally speaking will have a small write-up on what the exception is, whether it's one of 30 terminations processed was not processed within 3 working days or something of that nature. But generally, it'll explain the nature and extent of the exception, and then you will need to assess that and determine whether or not it impacts your reliance on those controls. So again, this is important. Just because you have an unqualified opinion does not mean there weren't some control exceptions. Generally, these control exceptions also have management responses that go along with them, meaning the service provider will provide a response as to what they've done to address it, and or how this exception was limited to only a certain number of transactions. And another point I'd like to make here is that along with the financial reporting risks, or rather your business process controls, there could be exceptions related to the IT general controls that are called out in these type of reports. Because like your overall SOX assessment that you do for your company, where you have business process controls and you have underlying ITGCs, it's very similar with a SOC report. You can think of it almost like a mini SOX audit, in that if you have business process controls in place, likelihood is you also are going to have IT general controls called out and that need to be operating effectively to support those business process controls. So you need to take a look at those IT general control exceptions, if there are any, and make sure that those exceptions wouldn't cause concern with the operation of the business process controls. I'm only going to briefly cover subservice organizations because we talked about it a little bit in response to a question earlier, but the point being that a third-party provider can use subservice organizations. These should be identified as part of the SOC report, either in the opinion letter or in the system description. And you, as the reviewer, will need to make sure that there's appropriate coverage of these subservice organizations as well. And to the question answered earlier, what if my service provider just sends me the SOC report of their subservice organization as a pass-through? Same answer. You need to make sure that the controls that you would expect to see in place, if that was an in-house function, are still covered fully by the SOC report being provided. And I believe we've covered this slide as well. I think the point being as part of a SOX process is that you need to make sure that this is all documented as part of your review and identify all those subservice organizations and make sure that there was proper coverage of those services as well. And again, to kind of wrap things up with respect to the review procedures, when you're looking at the SOC reports, generally for SOX 404 purposes, you're going to need the report to cover a full 9 months of the year. Now, some SOC reports cover 6-month periods, so you might need 2 6-month SOC reports to get full coverage. Generally, if there's only a 3-month or less gap between the end of the SOC report and year end, you're able to get a bridge letter from the service provider that is kind of like another assertion, but it's a bridge letter that they would issue to say that their controls have not changed and they have no reason to believe that the controls have not been operating effectively as they have been designed during that last 3 months of the year. Now, you'll have to talk to your specific external auditor to determine whether or not that's allowed, but generally speaking, 3 months is kind of the rule of thumb. If you go 4, 5, 6 month gap, then there is generally a problem with relying on that SOC report as part of your SOX 404 assessment. So what can you do in those cases? In some cases, you can go to your service provider and perform some testing yourself to get comfort over certain areas, or you can identify complementary or mitigating controls on your side that you're performing to double check the work. If it was, for example, the payroll service provider, you could implement a manual control on your end to double check the reasonableness of the work that they've performed and have a manual control that's tested as part of your process. So again, it's going to be a case-by-case basis. It's going to depend on your particular situation, but just want to make the point that if your coverage period has a gap that's longer than about 3 months, generally you need to take a look at your control set to see if you have appropriate coverage, because your auditor likely will not accept a 4 or 5 month bridge letter. So I know this is an abrupt slide for the ending, so we're not going to necessarily end it right now. We want to open it up for some additional questions. And just as a quick summary of the last half of the slides we just went over, when you do have a SOC 1 report and you are looking to review it, the important sections to review are to make sure that the scope of coverage of the report is in line with the services that are being provided. Make sure that the period covered is going to get you at least 9 months of the year. Otherwise, look for mitigating controls. You want to take a look at the complementary user entity controls to make sure that you have the controls on your side that are going to be applicable. Again, there's going to be this is going to require some judgment because the service provider can literally put in any complementary user entity controls that they want to. These are not tested by the service auditor. These are just anything that they want to put in to help protect themselves about the services that they're providing. And then you want to take a look at the results of the testing, any exceptions that have been identified, and assess whether or not those have an impact on your overall control environment and control activities. So at this time, are there any additional questions? Give a couple more seconds for some more people to submit.
Colin, we have one that's, what additional steps are required if SOC 1 report has control deficiencies? Are there other things they could do?
That's a tough question because it really does depend on the nature and extent of those exceptions. So just because a report has an exception in it doesn't mean that it's going to impact the controls that you're relying on whatsoever. So I would look at it in the same light as if this was an in-house function for you. So if you had payroll in-house, you weren't leveraging a service provider, and this exception, whether it's on the business process side or on the IT general controls, occurred, how would you address it if they were your own controls? You might have to write up a deficiency evaluation to identify why that deficiency is not going to rise to the level of a significant deficiency or material weakness. You might be able to point to compensating or mitigating controls that you have in place on your end that would address those deficiencies. A lot of times you're not able to go into the service provider or service organization and actually audit yourself. So it really comes down to assessing what the impact of those deficiencies are and determining whether or not you have any controls that will help address those. Looks like we have another question about what part of the businesses should be reviewing the SOC 2 reports. Should this be accomplished by the business, security, or audit? So this person is referring to a SOC 2 report, which I'm going to answer this the same way for a SOC 1 or a SOC 2, in that it depends on what you're trying to get from it. If it's part of your overall SOX compliance effort, I would suggest that if, in the example of the payroll provider, that your payroll manager or payroll director, whatever a person responsible for that process is in the company, should be reviewing it, as well as direction from whatever internal audit group or internal compliance group is helping to assess internal controls for operational effectiveness. So generally speaking, you would have some sort of a review template that is being leveraged by all departments so that you have a consistent approach to reviewing these SOC reports, and then those would be communicated to the various departments that are going to need to use them, and then have some training provided around those. But generally speaking, it would be somebody in finance, accounting, or in the actual department where you're using that provider. In some cases, it could be IT. If it's a SOC 2, you're leveraging a data center that's a sub-service organization. You could get a SOC 2 report from them, and it could be reviewed by your IT department or your security team for the applicable SOC 2 principles covered. And unfortunately, I have to answer that with it depends, but it really does depend on the user of the report and the reason for it. I have another one. For clarification, when a service provider indicates third-party providers are used and the SOC 1 indicates the third-party providers have a SOC 1 report, should those be included in the review and a copy of those reports be obtained also? Again, this one depends. A lot of times when we issue a SOC report, where the service provider is also using a subservice organization as part of their system, then one of the controls would be that the service provider performs a review of the SOC report exactly the same as what we have just covered. So when we test it as the service auditor, we'd be testing that control to make sure that they are reviewing the subservice organization's SOC report for applicability, for scope, for coverage, for any exceptions that would have an impact, etc. So a lot of times that might be included in the controls tested as part of the SOC report already. And if it is, then you wouldn't necessarily need to request and review that SOC report as well.
Colin, we have several more questions, but I think we're at the top of the hour, so what we'll do is go ahead and wrap up, and we'll ask our presenters to follow up with you outside of our webinar. And if you continue to have questions, things relevant to your organizations, just want to know, please don't hesitate to reach out to Colin or to Erin, and they're happy to answer your questions. We want to thank you all for joining us today.